I'd also like to extend my thanks to the California Jumpstart Coalition for all the work that they do in financial literacy, literally every day, day in and day out. And Visa is proud to be a long friend and affiliation with our affiliation with the coalition, and is committed to the coalition not just now but in future years. So I have the honor to present the Government Leadership and Financial Literacy Award to its first ever recipient, Assemblymember Ted Lieu. But first, what's this award about? Why is a politician receiving an award about financial literacy? We know what's going on across the street. Has anyone heard the word budget deficit? 2 minutes. No, but seriously, Ted is a leader. Ted is a leader that we can all admire and all feel safe to have represent us in the Capitol. He can read a P&L statement. He's also spearheaded many, many efforts around financial literacy, particularly certain bills, through the legislative process. And most recently, he helped spearhead and pass through the maze of legislation, Assembly Bill 2123. This bill is very important to all of us, to all Californians. It commits the state to address financial literacy permanently. It makes a commitment that has to be lived up to because it is the law. This is important for all Californians now and for our children and our children's children throughout the years. Ted's also worked in other related areas in regard to financial literacy like home finance and debt assistance. He understands the issues. Again, he's a leader that many of his colleagues turn to on these issues. Ted's respected by all these leaders again, and not only does he represent his constituency in Assembly District 53 in Southern California, but me in San Francisco and all of you throughout the state. So, Assemblymember Lieu, on behalf of the California Jumpstart Coalition, and in recognition of your continued and unflagging commitment to improving all Californians' financial literacy, I am pleased to present to you the first ever Government Leadership and Financial Literacy Award. Thank you.
Thank you, Nathan, for your comments. Let me just address one of them. The governor has vetoed 3 bills on financial literacy since he took office. I think had he signed them, we would not be in a budget deficit right now. But let me start off by thanking the California Society of CPAs, the Jumpstart Coalition, the American Institute of CPAs, and all of you for all you do in raising awareness of financial literacy. And since you're all here, you probably do know that more people file for bankruptcy than graduate from college, that financial issues are a leading cause of divorce, and that had we been more financially literate, this whole subprime mortgage meltdown could have been mitigated. And so that's why it's so important. And let me especially thank those teachers and educators that got awards today. I know you've gone above and beyond what you need to do. And my vision is that in California, that one day we follow the lead of 6 other states in this union and mandate financial literacy teaching in our schools. And give teachers the resources to do it. And let me just conclude, tell you a little bit about AB 2123. It translates different financial literacy curriculums in different languages. It creates a California Financial Literacy Corps to go and teach financial literacy to different people in the community. And the goal is to improve financial literacy awareness among all of us. And it's so important because at the end of the day, our entire financial system is based on freedom and disclosure. So we don't tell you what kind of loan you can get, what kind of mutual fund you can get, what kind of CDO you can buy. You can buy the riskiest possible thing out there. And we protect you by disclosure. And if you can't read that disclosure, can't understand it, aren't interested in it, the whole system breaks down. And so that's why it's so important what you do in improving financial literacy in California. And look forward to working with all of you. I'm very, very honored about this award. Thank you so much.
Ted represents communities in the southern part of the state. He is the chair of the Assembly Rules Committee and serves on 4 committees, those being Banking and Finance, Appropriations, Veterans Affairs, and Water Parks and Wildlife. Ted is going to update us on some recent legislation that impacts homeowners. Ted?
Thank you, and thank all of you for being here. I thought I'd give a little bit about the numbers that we saw today in terms of foreclosures. We know that last year California had a record number of foreclosures, and it's getting worse. So we found out today that this quarter, California's foreclosures increased by over 327% versus the same period last year.
Is that a record high?
It's a record.
It's a record.
And I think it's going to get worse even before it gets better. Last year we had across the nation about 250,000 of these exploding arm mortgages reset to higher interest rates every quarter. Well, this year we're getting about 500,000 per quarter. It's nearly double. And so I think we're just going to get increasing numbers of foreclosures. And California and Florida make up nearly 40% of the nationwide foreclosures. So we are one of the hardest hit states in the nation in terms of foreclosures. I've authored a bill, AB 1830, which sort of goes forward and says, we're never going to have this happen to us again at this magnitude. And it addresses those practices and those products that I believe have led to subprime mortgage meltdown. So in terms of practices, we know that there were people that were being steered into loans they never should have gotten. And the LA Times and Wall Street Journal both ran articles. There were 2 studies that came out. One that said 55% of current homeowners with subprime loans, and another said 60% of current homeowners with subprime loans had actually qualified for traditional fixed rate prime loans. And they were in these riskier high interest rate loans because they were steered into them and because the mortgage brokers actually got a higher compensation for doing so. It's called a yield spread premium, and it was abused. And when they abused that, basically the brokers got a kickback for putting a consumer in a higher interest rate riskier loan. AB 1830 bans that practice. The other thing we do is we ban the practice of giving people loans without documentation. So it's called a stated income loan. There are folks who are walking into these lenders and mortgage brokers. And if you remember during the mortgage frenzy, all you had to do was be able to flog up a mirror, right? You get a loan. So people would walk in and say, you know, I'm making $100,000 a year. You just have to trust me. I can't really show it. And they get a loan. And so we ban that practice. So in terms of documentation, they have to show evidence of their income, of assets and so on. We also, in terms of product features, ban those products that are just too risky. So there are these loans that are being offered called negative amortization loans. And what that means is the homeowner couldn't even pay off the interest on that loan per month. And so the principal will keep on growing. And in my view, there's no reason to give someone a subprime negative amortization loan. It's just too risky for them to have. And we also ban prepayment penalties. So some of these folks actually could have refinanced into a better loan, a fixed rate loan, but they were prevented from doing so because of this massive prepayment attached to the subprime loan. So AB 1830 also bans that. And so the view really is to target risky practices and risky product features that contribute to this meltdown. And I just want to sort of conclude by touching quickly on some of the arguments against this bill. And so if you listen to what industry says, they'll say, well, you know, we have a credit crunch, right? We've got liquidity issues. We have folks who can't get loans. And to me, it's not really a credit crisis so much as a confidence crisis. You have investors that are not willing to purchase loans that were being sold upstream because they can't trust that these loans are going to be paid off. And so by putting in AB 1830, you put in these reforms, it builds trust back in the market and says when a homeowner gets a loan from a lender, we believe that that loan will actually be paid off by the homeowner. And actually, let me go back to one more thing AB 1830 does. It requires the lender to look at the whole life of the loan, all 30 years, in terms of qualifying the homeowner to be able to get it. So what was happening is homeowners would be qualified because they could pay the first 2 or 3 years, but not the entire 30. And I can guarantee you that no lender ever went to a homeowner and said, we just qualified you, we believe you can only pay off the first 2 years and we'll give you this loan. They would never told them, right? Because when a homeowner gets a loan, they put all this information, detailed financial information, and they get a call, they come to the meeting, and they say, you qualify. And so when the average consumer hears that, they believe that a lender thinks that they can pay off the loan, when in fact, a lender only really believe they can pay off the first 2 years or 3 years. So those are some of the reforms we're doing. And so on a going forward basis, our hope is that when the governor signs this, and that we reform the mortgage process so that the price of magnitude never happens again. Thanks.
What's the timeline on this?
It is passed Assembly Banking and Finance. It will go through Assembly Appropriations and then the Assembly floor. Then goes through the Senate. And the governor usually gets these bills in August, September timeframe.
Okay, thanks. Thank you for the update.